In simple terms, you had Coinpanion and you had Revix's holding company. In order not to trigger a taxable event, you had Coinpanion become an investor in Revix's UK company. So you can see how those two are sort of tied in now.
Obviously, your South Korean partner as well, then trust got destroyed there because, as you said, actively lied to you.
Everything was frozen. But for us, all of our social media accounts effectively inaccessible. People wouldn't receive a single email from us.
I think one of the worst things someone can do in a crisis is to sugarcoat it to try and make people feel better and believe that everything's going to be okay.
When FTX happened, they effectively said there's just no way we can move forward with this. And the bank stopped all of their crypto initiatives. And that was the first set of really heart-wrenching layoffs. And that was, terrible.
How did this experience change you? How would you say that you are different now to what you were like before that? Hello and welcome back to the Founder Files. Today I am chatting to the CEO and founder of Altify, Sean Saunders. Now, Altify wasn't born out of nowhere. His original company was actually called Revix. And because of a massive calamity and crisis that happened in the crypto market, decided to join forces with another company in Austria and merge to form Altify. And that's pretty much what this entire podcast is about. What was that journey like to found your own company and then have basically a black swan event to completely wipe your market out, wipe out your customer base, wipe out trust? How do you handle the crisis of that? Then the decision to merge companies, how you went and navigated that, what were the challenges involved, why it took so much longer than expected, the mistakes that you made in terms of integrating the databases and the financial transactions between the two companies. What was that like for you as a person and as a leader? These are just some of the topics and the questions that we get into because, business is challenging enough, but then to go through a crisis and then to merge as well, there's just a lot that's really put Sean and his businesses to the test. And so very grateful that he was able to share these experiences here on the platform. And if this is the kind of stuff that you like, right, and this is stuff that you want to hear, these really authentic, honest, real stories about what entrepreneurship is truly like, then this is the platform, right? So if you're not following, if you're not subscribed right now, please make sure to follow and subscribe so that you don't miss another episode like this, where you get real deep, authentic insights about the real stories behind entrepreneurship. It's also the best way to support the podcast and the best way to make me feel happy as the host. So thanks for being around. Enough from me for now. Let's get on to Sean Saunders from Altify. Welcome to the Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. Sean, welcome to the Founder Files. I haven't had many merger conversations on the podcast to date, so the fact that we get to get into one now, I'm super pumped for. So thanks for joining us and thanks for being open to share your story.
Brilliant, Cameron. Good to meet you. Looking forward to chat.
Yeah. So, I guess I've already teed up the topic really, but just tell me a bit about your business and what it is now post-merger.
Yeah. So, Altify is an investing platform and we ultimately exist to make investing in private market assets. So think real estate, think private equity, think private credit, crypto, as easy as investing in stocks. And I think the reason that everything I've just mentioned probably sounds quite alternative and foreign is, that's partly the reason why we exist. We're wanting to make a lot of that a lot more mainstream. We have about 75,000 users between the EU and South Africa. The vast majority of our users are based in South Africa. And based on my accent, I grew up in South Africa, originally from Joburg, moved to Cape Town when I was 18, thought about heading over to the UK for a little bit. And then just fell in love and stayed in Cape Town for an extended period and sort of have been back and forth between the UK and South Africa ever since.
Nice, man. I actually even want to get into the name because of I'm reading between the lines based on what it is that you do. Altify, diversify, but with an alternative diversification. Is that accurate? Tell me a bit about the name and the company philosophy.
Yeah, that's exactly it. So Altify came about because we were looking at the words alternatives, so alternative investments, and then diversification. One of the most important things when it comes to investing, and Altify just came off the tongue really nicely. So combining those two words, alternatives and diversify. Previously, I'd founded a company called Revix. If you're South African, you'd probably say Revix. That was around for 5 years. And then Revix merged with a company based in Austria called Coinpanion. That's a mouthful. And ultimately, through that merger, we then formed Altify. both Revix and Coinpanion were building very similar businesses. They were both focused on the crypto market, and in particular, sort of diversifying within the crypto space. So offering these ETF index fund-like products within the crypto space. So if you wanted to invest in crypto like you would invest in stocks by investing in, say, like a JSE Top 40 or S&P 500 equivalent product, that's what Revix specialized in. That's what Coinpanion specialized in. And I mean, that's what we found product market fit with. So that was the original business. And then since then, with Altify, the reason that we rebranded and the reason that we went through with the merger and all the rest, and I'm sure we'll get into a lot more detail around that, was really to focus a lot more on alternatives. So the world beyond just crypto. And once you become branded as a crypto business, that sort of sticks with you. So even though Kraken, one of the largest crypto exchanges globally, has now introduced stocks, they're still seen as a crypto exchange. And this is something we picked up both as Revix, both as Coinpanion. And with Altify, we deliberately want to go out and be more alternative investment focused. So what we want to then enable people to invest in is private credit, like I said, private equity, venture capital, all these emerging asset classes that everyday folk haven't been able to really access. And yeah, I guess the story with Altify as well is a relatively new one. It's about 2 years old. It's been an incredible 2-year journey, a very different experience versus building Revix, and very different to my prior life working in financial services. I mean, a bit of background, I'm a complete finance nerd. I love reading the Financial Times. I love reading Bloomberg. I watch every single documentary around the sort of the history of money. So a big economics fan as well. And I then finished my CFA. I got way too carried away with active versus passive ETFs in my honors dissertation year. So landed up doing pretty well from that. And then that allowed me to get picked up by a hedge fund. I worked at a hedge fund called Banyan Holdings for a short period of time. Sounds really fancy. Working as a quant trader wasn't for me. Definitely wasn't for me. And then I worked at a family office called Sabbest. They're actually a listed family office in South Africa. I mean, they would call themselves a specialty investment group where they invest in high dividend paying private companies. And I was hell-bent on making this company a lot more tech focused. I failed dismally. I couldn't make them more tech focused really. But they actually became my first investor at Revix, and they're still an investor in Altify today. And I think in Chris Seabrook's words, Chris is the sort of founder and the CEO of Sabbest, that listed family office. He can't even spell cryptocurrency. So I think he backed the story. He backed what we wanted to build. And then I went to work for another family office based in the UK called Draper Gain. And there was a lot more focused on tech, and in particular fintech. So I was looking at the payment space. I was looking at the world of investing. And throughout that entire process, I really found myself wanting to build something. And at that point, it was also, I had a lot of interest when it came to investing. And of course, there was this sort of perfect alignment of interests and skills being, okay, you're going to enter the fintech space. Payments is probably not your world, but if you can get involved in the investing world, like there's a desire to want to democratize access to private market opportunities. And everything sort of lined up really nicely for that to happen. And I love what I do. I think that's one of the biggest things. I would do this for free if I could. And I think that's probably one of my personal competitive advantages, or call it a superpower, is that I just really am passionate about this.
Yeah, man, I totally feel you, and I can resonate exactly with what it is that I do. I mean, this intersection of strategy and psychology, like I plan to do my PhD in entrepreneurial psychology at some point, just because I love it, especially on this podcast as well. Like if I could, I do this pretty much every day, but like I'm living the dream. The one question that came to me when you were talking was why, right? And specifically why alternative assets, right? Why alternative investments? Like why is there a need in this space, a need in this market? Because everything you described, from like real estate to VC, private equity, like crypto, I think about myself in terms of how I go about investing. And it's kind of like, I'm curious about these spaces, curious about these markets, but like got a financial advisor, gonna like just dabble here and there. But one, it can be intimidating, but two, it's like, I treat each of these categories, it's like, you kind of got to commit to one properly. Like if you're going to be an LP in a VC fund, like you're maybe going to have your own diversified asset book, but like that's your main thing. So I'm like curious to know, like why, basically at the most high level, why do we need an alternative investment class?
Very, very good question. I mean, that's really getting down to the fundamentals of this. And I can tell you that I was sitting in this plush family office based in Knightsbridge in the UK. Those carpets were a good 7 centimeters thick. And I was sitting there going, oh my gosh, this is an incredible opportunity that I have to invest in, right? I was looking at an opportunity on a Bloomberg terminal, and then, looking at through a couple of different opportunities of various fact sheets that we had. And I was going, I just wish I had a couple $100,000 to be able to invest in this, and a time span
if only.
of several years, right? And
Yeah.
what
Life would
became
be so
very,
much easier.
oh yeah, totally, right? I mean, give me $1 million, life is easier, right? But what became really apparent, and you can see this in all the financial research that exists out there, is as you move up the wealth spectrum, so as you become wealthier, right, and you get to that sort of like pinnacle of being in the family office space, all of a sudden you've got all of these different asset classes that are opened up to you. When you're not in that top spectrum, you've got a couple, right? You've got maybe the ability to invest in bonds and real estate through like listed ETFs or REITs that are listed on like the JSE or whatever stock exchange. And then you can invest in stocks, and now more recently crypto, and then you can dabble in commodities. But going outside of that world is really difficult. And it's because of what I faced, right? Which is really high investing minimums, a lot of complexity. Some markets also have the challenges around accreditations and all the rest. And I sat there going, okay, well, these private market investment opportunities are where you have the majority of funds of wealthy people invested. So you've got more than 50% of like a family office's portfolio generally is in private market investments. And that's because it earns a higher, or private markets on average earn higher returns than stocks. And they're a lot safer. And there's a diversification benefit to doing all of this. And that's why you'll also see your pension fund will be heavily exposed to private market assets for this exact reason, that your wealth is protected.
Quickly, just define private market versus public market for me.
Yeah, so public market, everything that's listed. So you're looking at your public equities or public stocks, so everything that trades on, let's say, like the JSE or the New York Stock Exchange. And then you've got bonds as well, like various bonds that you could obviously buy and sell online. Everything else, I mean, the house that you're in, right? So everything that's not listed on an exchange, that would be deemed to be a private market asset. So more specifically, you're looking at, say, venture capital, or you're looking at private equity. These are private market asset classes. These aren't asset classes that generally trade on public markets. There could be investment products that give you exposure to some of these markets, but I mean, the private market is a lot bigger than the public market. It's just that not everyday people get to, or everyday people don't get to play.
Accessible.
It's not as accessible. Exactly that. And that's what we're ultimately looking at changing. So the big why is going, okay, you earn better returns over the long term. Your wealth is better protected by investing in private markets. And everyday folk can't invest in this. It's not easy. It's not accessible. It's not even understood, right? I mean, you've asked some really good questions, Cameron, and those have all been the questions that we're trying to educate customers about, which is there's this entire other world out there that's not the stock market, and it's not necessarily the crypto market. And that's the reason why. I think you can fundamentally change a society if you're getting people to invest more and growing their wealth like the top 1% do. So that's the fundamental why behind this. And I face this problem myself. So if you're really passionate about a particular market and you're passionate about these sorts of opportunities, it's like, well, I'm going to solve that problem that exists in the space.
I mean, yeah, but it's also the game of finance is so nuanced and often complicated. I'm just trying to think out loud about the problem around the private markets and why most people aren't accessing it. One is the informational complexity. This point of like we even work in the VC space and the VC market, and it's just the intimidation of this, knowing that it's high risk, kind of high reward and high return. Like my only way that I could probably think of getting into the VC space is through my personal network. I'll go to some of the GPs of some VC firms and be like, hey, I want to be an LP. And it's like, cool, ticket size is starting at $1 million a head. And it's like, okay, never mind. Right. So I like even if we get over this informational complexity barrier or even this network or access barrier, my perception is there's still this barrier to entry just around ticket size and the capital requirement to even begin investing. Like I've already listed 3, but what would you say are the entry barriers to entry that people are struggling to overcome in order to just participate in the space?
Well, I think it's also that assumption that private markets are high risk. So just like you have stocks that come across the entire risk spectrum, right? You've got Unilever, which is significantly lower risk than, let's say, like Netflix or Tesla. The same thing exists in private markets. So certain real estate, so like if you're buying blue chip property in the middle of Mayfair, London, as an example, I mean, whether or not there's going to be a positive return over a period of time is a question for debate, but will this lose all of its value? It's very unlikely. And that's why we believe people should be accessing private markets. So I think education, just understanding the space more broadly, and then being able to start with smaller amounts. So, I mean, instead of having hundreds of thousands or millions of rands, being able to start quite literally with 1,000 rand or 150 rand, which is what we have with some of our products, that allows you to test out the waters and to feel more comfortable. And once you feel more comfortable, obviously, when you've got money in something, you land up learning more about it and you go on a journey. And that's really what it's all about. It's this investing journey that you go on. And to start with, maybe it is just buying a little bit of Bitcoin. Maybe it's putting money into a money market savings account. Maybe it is buying your first stock. Everyone starts somewhere. But then as time goes on and they accumulate more money, it's either that they're going to hand this over to a wealth manager and the wealth manager is going to invest the way that we're trying to advocate everyday people to invest. Or you can go and try, build your own diversified portfolio. And that's what we ultimately want people to be doing. So yeah, biggest barrier to entry without a doubt, education. Second, the investing minimums. In certain countries, you've got accreditation requirements. So you actually have to have a certain amount of wealth, or you have to be earning a set amount, on an annual basis in order to invest. South Africa is slightly different. We don't have accreditation requirements like what you have in the States or what you have in the UK, but that has that significantly changed over the last few years. And there's actually a bill sitting now in Congress to significantly change this in the US, which would make private market investing, so where you could invest in, say, a startup, a lot more accessible. And that means everyday people not necessarily can go and put their life savings into a startup, but they can allocate a portion of their capital, understanding the risks, understanding some of the challenges that are involved as well.
So that would be hugely needed. I mean, we've got a massive capital allocation problem to startups and small businesses in South Africa. Okay, I understand who your market is, right? Because you brought up wealth managers there, and like I start thinking, are these people that are going to be potential channel partners? Work with them? Are you going to be servicing them as well? Are you maybe even competing with them because maybe their customer doesn't need them anymore if they utilize your platform and you're actually playing in that space? And then even if I'm thinking direct to customer, is it going to be the easiest behavior change is someone that's already got millions that they're trying to invest because they're participating, like they already have knowledge and they're thinking this way. Or the other side of it is people in their early 30s who are thinking about should I be investing a little bit into crypto, right? Just to diversify my portfolio. And I would consider myself a bit more innovative and I'm looking for some cool things. And I've got a friend that I know is a startup founder and he doesn't want my money, but I'm curious, so yeah, who's your market?
So we predominantly focused on Henrys. You're going to love this term. So Henrys are high earners, not rich yet. So generally speaking, somebody that's earning a decent amount of money, I won't go into any exact figures, but sort of north of 500,000 Rand on an annual basis, and they're not rich yet. They want to invest themselves, generally speaking. If you want to invest with a wealth manager or you use a financial advisor, I mean, sure, we'll work with that wealth manager, we'll work with that financial advisor, but our main focus is sort of democratizing those investment opportunities that your wealth manager is going to. And over time, I suppose that you would have, AI become a much bigger part of this equation. And I think you will be able to rely on sort of an AI investing co-pilot a lot more, which is currently the role that, your wealth manager is fulfilling. This may be a 1 to 5 or maybe even a 10-year journey where you see a big transition that occur in the space. But what we'd ultimately like to have is an AI sort of co-investing partner that would be able to support you investing across different private markets and also to invest in public markets, of course, like stocks as an example. So we don't service your sort of financial advisors all that much. We rather service the individual that goes, okay, I don't want to be paying my financial advisor 1 or 2% a year for something I can do myself. And then we want to be able to skill you up so that you actually can do that yourself efficiently and that you build this diversified portfolio. The worst thing for us is if you come along, you make an investment and then you lose money. If you do that, you're not going to want to invest more. You're not going to refer people to the platform. You're not going to have a great experience. So it really is a case of make sure that you are starting out small, that you're not going to be losing sleep over this investment. You're choosing to invest for the long term and you're diversifying. And then ideally, over time, you're growing your portfolio.
Okay. And so what would your customer interface look like? I mean, you mentioned technology, you mentioned AI there. Again, I think just naturally we gravitate towards comparing to what's the norm and status quo. And there's usually private bankers, like you said, private wealth managers, financial advisors. There'll be a human being providing a knowledgeable service towards this. But what I'm intuiting is that you've made this simple enough to understand and do through technology that people can DIY this.
Spot on. So you could head over to our mobile app. We've got an app across the Apple App Store as well as the Google Play Store, or you could head to our website. Our website's got a web app that you could utilize. So you can imagine us being very similar to a crypto platform, right? So you could go to like Aluno, Valor, Bybit, Coinbase. I mean, we've got a very similar sort of interface to that. the big difference really, or I guess in the South African context, you can also think about, say, easy equities, Robinhood on the international stage. As we've got that sort of interface, but instead of being focused on solely crypto or solely on, say, stocks, we're focused more on private market investing opportunities. And what we want to then layer in over time is more AI functionality that allows you to sort of ask good questions. So is my portfolio really diversified? As an example, why did my portfolio go down 2% over the last week? Or why did it go up 5%? What are these factors that are causing this? And then you're not learning about general sort of macroeconomic topics or financial topics. There you're learning about what you've invested in and why the market's moved in a certain way. And it's just hyper relevant. So that's one of the big focuses that we have over the next couple of years.
I want to put you into a pretty awkward position right now because you're speaking to a prospective customer right now. And what I'm curious about is like someone who's like, I'm definitely curious. I'm interested, but still a little bit skeptical, right? Because I'm nervous about where I put my money. And there's no one that I can really get in touch with to manage my anxiety or concern here besides you. And so the reason why I'm putting you in an awkward position is like, I don't want to get the CEO sales answer right now. I'm just genuinely curious for someone like me, super curious and interested, but it's like, oh, this is very innovative, but therefore unknown. Yeah, how would I get peace of mind in helping me through that emotional anxiety and making the right call? Besides, start with $150 and take it from there.
Yeah, that was going to be my boring answer. Is start small,
Okay.
right? I mean, I think a lot of people have got used to investing where you invest in the stock market and then there's a 1 to 3% change in your portfolio every day, and you're kind of logging in, kind of going, okay, I've got this like anxiety around that. Or you've gone totally the opposite and you're super conservative and you're sitting in a money market and then you're earning less than a market related return, or you're losing a lot of money to inflation. On the other end of the spectrum, you're entering the crypto market and then you're on this wild roller coaster and you become just, I guess, very good at managing your emotions on a daily basis. So for us, it's a case of starting small. It's a case of engaging with our customer support team. It's reading the articles that are being sent out. I mean, you go on an investing journey. There's no way that you can remove the emotion from an investing journey. Some people are much better at handling it than others. And I think that's the big thing that we focus on. It's, you sort of get used to this. I mean, I've been investing now for, about 15 years. And I've gone through insane declines in my portfolio's value, right? I never knew oil could go negative. And I had invested in oil when it went to $3. And I was like, $3, for WTI oil, this is absolutely incredible. And it went to negative $36. And you have to then manage your emotions around that. Prior to that, I invested in a company in South Africa that was a super small entity. I won't even mention the name. And I thought I had this company completely figured out and it was worth about 4 times its value. And the company went bust. It went to zero, right? And literally dropped 98% in a single day on the JSE. Trading was halted and then it was actually delisted. And you sort of have, I mean, I don't want people to ever go through those experiences, but that's part of investing, right? And it's you ideally want to be more diversified so you never see a huge drop in your wealth when it comes to that. But that is just part and parcel of putting money at risk. And with private markets, ideally, you're going into a very different area of the risk spectrum. We don't list any opportunities where there's just like a single, you're not investing in, say, like a Microsoft. So you're investing in if you're not investing in, say, the crypto space, you're investing in this diversified fund or the equivalent of a diversified fund where there's many different opportunities. So the chances of that going down 90 something percent or 80% or even 50%, 10% is really low. And that's the way that we look to protect customers. And I think that can provide a bit of peace of mind. However, if you do want to invest in more speculative opportunities, there is a desire for that. Gold can be considered quite speculative over the last while. It's up about 30% year to date. We offer that on the platform. We offer 50 plus cryptocurrencies. We've got these different crypto ETF products that came from the prior business that we had. And these are far more risky and people absolutely love them, right? They put a lot of their personal net worth into that, but you've got to figure out that risk spectrum and that sort of investing risk that you're comfortable with. And you find that, I think, over time with a little bit of trial and error, hopefully, less error, more trial. But yeah, that's the journey.
Well, I think what's been made very apparent to me now is we've 100% got founder business fit right in front of me. So that's quite cool. So Sean, okay, let's to get back into the besides me trying to convert myself and every audience member to be a customer of yours right now, let's get back to the original story, right? So Revix, yeah, man, I want to know what happened, right? So why you started that business and then why the merge and change and rebrand in the first place? Obviously, those are 2 big questions. Start with the first one, like talk to me about the founding story.
Yeah, quite incredible. So, I mean, I believe that there was an opportunity in the crypto space. This is now back in 2017, 18, for people to invest in crypto like they invest in the stock market. So through these ETF-like products. And there was immediate product market fit. I mean, I went out and I spoke to various investing professionals and I said, listen, if there was, say, a top 10 or top 20 tracker that tracked the largest crypto assets in a single portfolio and then was automatically updated on a regular basis for you, would you buy it? And the first 5 people I spoke to, it was all yes, yes, yes. And it wasn't one of those things where it was like, would you buy this? Yes. And then they don't actually buy it. It was like, how can I send you the money for this? And I just felt this like, okay, you have to start this. And I put my life savings into then building Revix initially. So bootstrapped the business for just over a year and a half, then went to that family office, Subvest, that then gave us our first check. And we raised about $6.5 million, scaled up the business, had some absolutely mental stories. During COVID, we went from 8 employees, and this is 2021, we went from 8 employees through to 45 in like 6 months. And trying to do that for the first time ever remotely, and all the rest was just, it was damn challenging, but it's just an incredible journey, something that I'm very grateful to have gone through. And then there was a couple instances that also fundamentally changed my life that weren't necessarily as positive. One of which was this hurry incident that landed up occurring. So the way Revix worked is that we dispersed funds across different platforms. So you would execute a transaction with us. Let's say part of it would be on Coinbase, another part would be on Kraken. We would keep some funds in cold storage. I mean, this is the way that most different crypto brokers work. And the reason that you disperse funds, of course, is that you want to mitigate risk. And the service provider that we had chosen based in South Korea, and we were actually looking at partnering with a service provider because we wanted to offer crypto savings accounts. So that's where you could earn a yield in, say, Ethereum or Bitcoin or whatever else to our customers. They were going to be our partner. And after the FTX collapse, this company ended up going down as they were impacted by FTX. And what ensued was the absolute worst 3-month period, or probably 6-month period of my entire life. We had to go to our customers and say, listen, this has happened. And, there was a lot of legal advice that we were seeking. We're going, okay, are we going to be able to actually retrieve these funds? What does this actually look like? How do you handle this? And then you mentally, obviously, are needing to handle a lot of this yourself. And I made a decision to do what I truly believe to be the right thing by customers. Yes.
I'm going to pause you there. Wow, that was probably that is the most unscripted cliffhanger, but absolutely amazing. But I am going to leave it there for a second to go back. You rattled off a whole bunch of stuff that normies like me who don't really understand the finance space, the crypto space. Talk to me about FTX, the collapse. You spoke about this offline, so you have prepared me for it. But for the people in the audience that might not know this stuff, just explain what happened. What was so significant about this? Why was this like doomsday?
Well, FTX was the most trusted crypto player. And it was purely by coincidence that we hadn't yet integrated directly with FTX because FTX had some of the most liquidity. So this means that if you were looking to do large transactional volumes, our customers would obviously be buying and selling these various crypto portfolios that we had, that we call crypto bundles back in the Revix days. And naturally, FTX would have been a really good partner because there was loads of liquidity. So you could get really good pricing when you're looking to buy or sell any different crypto assets on FTX. And FTX was on our roadmap to integrate with. Now, because they were sort of the most trusted, they had sponsored various, football stadiums. They were really sort of everywhere. Their main founder, Sam Bankman-Fried, he had become quite a prolific figure, presenting to Congress, just being a big crypto figurehead. And then towards the end of, was it 2022, I think? Towards the end of 2022, FTX effectively was deemed to be insolvent. And what had happened is that FTX had a sort of sister fund, and this is actually Sam Bankman-Fried, the founder's sister fund called Alameda Research. He had transferred funds, and this is predominantly tokens that are customer tokens, over to this fund-like structure, and that fund had lost value ultimately. So the customer assets didn't match the liabilities. You had customer liabilities, i.e. the exchange owed more money to customers than what the exchange actually had. And then you landed up having this sort of run on the exchange. So that's in very simplistic terms what landed up happening. And everyone was sort of
sounds like the normal recipe for a market collapse.
Oh gosh, yeah. So I mean, that happened, and that was the biggest casualty in crypto history. And I mean, just for reference, the Lehman Brothers collapse was sort of 55 billion. This was about the same in value. I mean, they had about 55 billion. So huge collapse, right? And this then set off a cascading effect of different collapses across the space. I mean, you had big names like Celsius, Three Arrows Capital. I mean, if you're in the crypto space, you'll definitely have heard about these companies. And yeah, all these companies were impacted. Why? Because they were using FTX in one way or another, or they were affected by this. And unfortunately, unknowing to us at that exact point in time, but the South Korean partner that we were engaging with, and that we had thoroughly vetted. I mean, this partner that we were working with, they were regulated across 3 different jurisdictions. We had actively asked them about the FTX collapse. And yeah, unfortunately, they had outwardly lied to us and said to us that they weren't impacted by FTX at all. And they in fact were. And then on the 13th of June, 2023, we landed up getting an email effectively from the customer support team at the South Korean platform, this partner of ours, to say that all withdrawals were halted. And what ensued was the absolute worst period ever. So we had to do everything we possibly could to do right by our customers. And, what ultimately ensued, cutting also a pretty long story short here, is that, we had to withhold as Revix now 24% of customer crypto assets, because that was the percentage that was held on this platform. And that was what I believe to be the right decision to be made, simply for the reason that if we didn't just withhold 24%, the business would have had to declare bankruptcy. Obviously, there would have been a further cascading effect and customers wouldn't have got back anything. So the fact that we were only withholding 24%, and I say only here, with quotation marks, withholding that 24% meant that customers could withdraw that remaining 76%, and then we could fight as Revix to get back the 24% from this partner called Haru Invest, based in South Korea. So absolute worst period ever. I mean, you can imagine you having to deal with your own team and the shock that this has caused to the business. Very heavy withdrawals, of course, because there's this loss of consumer trust. You're sort of caught between all of this, and you can't point fingers, right? Ultimately, you've got to take accountability and go and be decisive, and be that hero that you hopefully look back on later. And I get to look back on this sort of period of time now, and I go, how well did I handle that? And I guess there's a whole bunch of pros and cons, but yeah, just an absolutely insane 3 to 6 month period to have to deal with that.
Yeah, I mean, man, you brought the word trust now, and I can imagine like you're in this absolute shitstorm of a decimation of trust. Is that it's happened at a macro level, everyone about everything around FTX. Obviously, your South Korean partner as well, then trust got destroyed there because, as you said, like actively lied to you. And then immediately now consumers are losing trust. They're pulling their assets, and then they're pulling they're withdrawing their crypto from you. And then you're like, sorry, you can't have it all. And they're like, excuse me, what? Now you want me to trust you some more? And it's like, and you can try and explain that, but they're just going to be like, I knew it was too good to be true. The crypto space, these crypto people are all horrible human beings, just trying to steal everyone's money. I'm done with this asset class, right? I'm being dramatic, but like I can imagine there was a lot of people like that, and you're sitting there, like trying to be integritous, trying to have character, trying to do the right thing. How was your sleep at that time?
That's such a good question. No, terrible. I mean, that period was off the charts, the worst. Like, I can't even, like, I start going back to it and I start like having a twitch. It was absolutely terrible. I'm very proud about how we sort of stood in the face of everything. I'm talking now about sort of the core team that we had at Revix. We really came together and we did what we needed to do. And, in hindsight, I think we did exactly what was required. In many cases, went against legal guidance. I had legal partners that said, hey, listen, walk away and, shut down the business and then just let, other parties deal with this. And I was like, that's absolutely not the right thing to do. It's not the right thing to do by customers. And I have a reputation that, I want to maintain, and I want to, really be able to respect what customers will be able to get later on as well. So that was a really big focus. And, it's still something that's had to be dealt with. I mean, we had to get, legal partners based in South Korea, and we've had to work through, quite a lengthy process on that side. And, amongst all of this, we had this merger that took place, formed Altify as like a new company. And I mean, there's been a lot that's happened since then, but still absolute worst period. And, something as well that, you learn an incredible amount from. You also, you can point fingers at whoever you want. At the end of the day, it's just about how you respond to it, though. And I think it taught me a lot around accountability. And again, it's not a case of, pointing at Haru, pointing at FTX, pointing at any of these partners. It doesn't matter. Our customers were unhappy with us, and we had to work to rebuild trust. And I'm also very proud to say that, we had several thousand customers that understood the situation. And I mean, I was on the call with a lot of our customers as well, but understood the situation. And, we've kept them updated, every single month with various emails that we've sent. And that doesn't change the situation. But I think there is a different level of understanding versus what you have to look at sort of most of the other platforms out there. Walking away, I don't think I could have lived with myself. just walking away from the situation, saying, cool, let a liquidator, deal with the customers, and customers would have got nothing out, and that would have had a very serious impact on a lot of people.
Yeah, well done to you, man, for standing by your own values and morals there. Because I think in a situation like that, people really show their true colors. So I want to go a little bit more specific and deeper on what you mentioned, because you said like you obviously learned loads of lessons throughout this period. Then you mentioned specifically around accountability. Can you be a bit more detailed? Give some examples. What were these lessons that you took away that you think someone else in your shoes right now could benefit from?
If you can take extreme accountability around these sorts of scenarios, like it gives you the ability to find solutions. And I think that's the biggest thing, is instead of just going, well, listen, I can't do anything about this, I'm sorry, you can actually go and say, cool, the way that we deal with this is XYZ, and you can outline that strategy. So I think that was something that was incredibly valuable. I think I was quite lucky as well. There's a book from Jacco Willink. He was an ex-Marine. Extreme ownership, yeah. And I think that was something that just fortunately was kind of playing in my mind, where I was like, okay, own this, deal with this, take accountability, even if it is not, your fault directly, still, figure out how you can you can find a solution to it. So that was, incredibly valuable. Also think, there's a lot of people that turn to you, and it's during those terrible periods of time that, you get to really be that leader that once upon a time you were aspiring to be, or, fast forward many years, you get to look back on and go, that was a moment that I was proud of. And, you've got to still sort of handle this crises with investors, right? Because we've got many shareholders. You've got to handle that with clients. You've got to then handle that with your team. And I was very proud about how we managed all of that internally as well. So, if I have to think back, it's always during those difficult times. It's that shareholder update that you have to send. It's that call that you have to have with various investors. I mean, there was many times where, you sort of speaking like this, where you can barely like say anything because you're shaking and you're so nervous. But I mean, my word, like, in hindsight, the way that you level up through all of this is just, it's out of this world.
Well, I mean, that's when you're like, okay, cool. I feel like I've earned the CEO job title now, because like there's no one wants what you had to do and what you went through. Let's talk about the crisis management points, right? Because I think fingers crossed, someone else listening to this is not going to go through the kind of crisis that you went through in terms of going through that. But what I want to know is the specifics around to those different stakeholders, how you manage that crisis.
Yeah, so crisis mode, and good advice or tips around that. I think the first thing is to have a plan. So to go and actually write something down that was really good. And I mean, it wasn't the final version that was ever noted down as sort of that first draft. We went through many different iterations. We got buy-in from a lot of different people, and then, biting the bullets and just being incredibly honest. And that was, again, the most difficult thing to do at the beginning, but paid off over the longer period of time, right? So, having that frank conversation with the team on the same day that it happened, talking to shareholders directly, dealing with clients directly. I think all of that was really valuable. And then in terms of managing everything, I mean, you're not going to be an expert across the spectrum, right? So if it comes to like crisis PR, appointing a crisis PR partner, they've been there, done this on a daily basis for, 10, 15 years. Being able to leverage those sorts of skills, absolutely incredible. And then being able to lean on mentors. So that was something that was really valuable as well, is that there were some investors that turned around, some of our investors, as in shareholders, they turned around and we said, okay, how can I help you? And just remember to think about this, think 3 years out, think 5 years out, how do you want to handle this specific situation? And that was just, an incredible set of questions really that allowed me to approach this in a very different way. And I think, it's one of the worst things to do is because naturally you're depressed, right? You've just, your business is now in this huge state of flux. Your team is really uncertain. They obviously are going to be looking for other roles and stuff. They're not sure about whether the company is still going to be around in 6 or 12 months time. And you need to be able to calm nerves. You need to be able to handle all of that. And, having that sort of plan in place and being able to engage with people in the right sort of way and in an honest sort of way, it also sets you up for massive success later on. So later on, when you actually say something, if you were able to do that during that really difficult period of time, you're going to be able to do it in a less sort of difficult or less stressful sort of period of time as well. So that was really advantageous as well. But I don't think closing up is probably the worst thing you can do. Speaking about these sorts of things to someone and being able to get other people's buy-in and opinions, and you won't necessarily agree with everyone, but just, thinking about things that you maybe wouldn't have thought about become incredibly valuable.
Also, what you're describing makes me think of, are you familiar with Brene Brown and her work?
Yeah.
So like daring greatly, just how vulnerable that is to go there. And it was like, guys, this is chaos. This is horrible. I don't have the answers, but we're going to make it through together. And like, bring it, whatever emotions, feelings, questions. And it's like, I'll see what I can do. Right. But I
Yeah.
think that's the point where I think one of the worst things someone can do in a crisis is to sugarcoat it to try and make people feel better and believe that everything's going to be okay. And like, again, I haven't been through this, but I'm imagining there's a very fine line between being vulnerable, open, and honest around the fact that it's like, this is chaos and we're handling it, but not being too honest about it. The fact it's like, I'm freaking out. Like they still need some kind of stabilizing factor. The reason why I'm thinking about the crisis PR is it's kind of like, this is the honest situation, but like, we're still on top of it. And then the reality is like, I don't feel like I'm on top of it at all, but I'm like taking full ownership and doing what I can.
Yeah.
So actually, yeah, what's that balance between being like vulnerable but not too honest at the same time?
It's a fine walking line, right? I mean, there's people that will know that you are depressed. And I mean, I was definitely depressed over that period of time, but my team would never have known that because I needed to be there. And I think it really was just that simple. It was a case of to shareholders, to clients, and to the team, I would be a specific kind of personality type, which is to say, yeah, I'm affected. I'm really, upset about the situation and negative, but I'm going to be purely objective. And I want to handle this as if I was an AI and sort of, I don't know, go through that process. And of course, emotionally relate to team members. So I'm not saying be cold in any sort of way, but certainly relate to things in a more objective sort of fashion. And in my personal life, sort of outside the shareholders, clients, and employees, it was definitely a case of, geez, I'm battling. Like there's a lot of personal struggles that I'm having here. You mentioned sleep. Sleep was a massive challenge that I had at that period of time.
What did your personal support structure look like during that?
My family were absolutely incredible. And my girlfriend, I mean, I was sitting in London, in Chelsea, and I can remember exactly where I heard this news for the first time. And I mean, they were just, all of them, remarkable. Like, whatever you need, we're here. If you want to talk about it, if you don't want to talk about it, if you just want to go for a walk. I mean, the number of times I went into Regent's Park in London and sort of just walked and like thought to myself, my gosh, like this is the end of a chapter. Just thought it was the end, right? Because obviously you need to start planning out what's going to happen next. And weirdly, it was also a very cathartic sort of period, because the biggest fear that I had at that point in time was exactly what happened, right? I mean, up until that point in time, if you had asked, what is the thing that you would get the most nervous about? It's not necessarily that somebody would hack into our system. It's that something completely beyond your control happens that impacts your team, your reputation. And this business was everything and still is everything. And to me, it was a case of your identity's been ruined. You're a failure. And you start confronting all of these things. I think you start off when sort of building a business and you see some success and you get imposter syndrome and you have to deal with that. And then when this happens, it's like you're so grateful for just having the 100 customers that you would have had. I mean, in that case, we had north of 15,000, but you're so grateful for everything that you had before. And I think that's one of the biggest takeaways that I have now is I can write down on a daily basis the things I'm grateful for. And often it's like the small things. Like I'm really grateful for, I don't know, having lived through that, to have that experience, to be able to bring these sorts of things up, for having that sort of resilience, because gosh, that to me was the biggest and most trying thing of my entire life. And I hope no one else has to go through that. Of course, other people will, but it was just a remarkable experience. And like I said, quite a cathartic experience at the end of the day.
I hear you, man. And an insight that I'm putting together in my head based on what you've described is the lesson I would walk away with is that if I'm in such a significant business crisis like that, it's about the fact that it's separating Cameron from CEO, or like the business needs a CEO right now, and someone's got to step up into that, right? And that's me. And so the point is, it's not about Sean. It's about the fact that I need to be a CEO right now. What does that look like? Cool. Now I know what to do. But then Sean still needs to be Sean outside of that. And then it's like, I need the personal support. I need the existential walks in the park. I need like moments to take a step back and actually feel my feelings. And I think that's maybe a good separation. And it's a useful one for crisis mode. I think if someone carries that too far into everyday life, then you can get this identity blurring and things can probably get confusing. But in a crisis mode, it's a necessary way to cope, actually.
No, without a doubt. I think the other thing is, when something like this happens, every other problem in life becomes irrelevant. All right. And I think an even more extreme example is when somebody passes away. Because to me, that's just another, and I would assume to most people, that is just a complete another level versus all of this. This is not just games of business. This is now, people's lives actually ending. And it just puts everything into perspective. Like the small little problem that you had where you're bickering with insert whoever it is, right? Or you're having this sort of an issue, like it just becomes nothing. And I've had that now for quite a few years where the problems that were once really big to me and that I would get very frustrated about are much smaller. So I guess that's one of the key takeaways. I guess that's, a bit of experience as well now.
Well, that also segues into actually the next question I was going to ask before we move on to the next topic. But like, how did this experience change you? Like, how would you say that you are different now to what you were like before that?
Oof, I think there's some really big positives, and then there's some, I guess, depending on the perspective, there's perhaps some negatives. The positives is perhaps as an individual, I can say, from a resilience standpoint and also just a sort of view on life perspective, I mean, I'm just not as touched by smaller things as I was before. And I do believe I've got a different level of resilience. And I know that no matter what happens, I'm going to be able to go forward. So there's no sort of big questions around that. It's kind of just like a when rather than a when and a how, rather than like if. And I think that was a really big sort of shift change. I think in reflection, I went, okay, you have to be more conservative. You have to sort of be a little bit more cynical. And I say that's where there's a bit of a negative side that came through, because I did become a lot more cynical after this. I think, having engaged with a South Korean partner, having done extensive due diligence on them together with the finance team and, trusting them ultimately, like these are guys at the end of the day we were on calls with. We, had several engagements with over a long period of time, and for them to have lied about certain things and to ultimately have had our own reputation impacted by that, it's definitely changed the way that I engage with other people going forward, where I'm just far more cynical and skeptical to start with and then become more positive. And I think that's, unfortunately just a side effect of this. I think on a more positive note, and I mentioned this a bit earlier, but I'm just a far more grateful human being for the opportunity to build. And I think I went from being sort of, I want to build something really big and I want to build something that's going to impact lots of people's lives, to still wanting to do that, but actually just really enjoying the craft and being grateful to be able to do what I do and what I love to do on a daily basis. And that's been really refreshing. So, I mean, I could spend a lot more time speaking about this, but yeah, fundamentally, geez, I've changed in a massive way. I'm maybe as well, just something else to note, I'm maybe less idealistic as well. And I think I've got some far less conventional views now. Previously, I had a very, and I'll call it a San Francisco-based founder mentality, where it was kind of, oh, you've got a mental health issue. I'm going to respect that. I'm not going to ask you anything about that. Go home, take your time. Or you haven't reached a deadline. Oh, that's okay. Don't worry. And I don't know how much this has directly got to do with the Haru event and this whole entire thing, but I've completely changed, where it's a lot more performance driven, where I think I've got less patience as well dealing with external parties, where I'm like, it's too short. You've only got a very short time to make things happen. And that's also been, sort of a big change that's come into effect.
The word that comes to mind there is one, anti-fragile. It's the fact that you can believe that you're anti-fragile before that, until like you go through that and it's like, oh no, I've proven to myself that I'm anti-fragile. Before that, you can think you're anti-fragile, but now you've got proof. Like, it's like, I know I'm anti-fragile. And like that whole experience has really just leveled you up. But with that means that like your standards come with you when you level up too. And so your expectations of other people is, I promise you working a couple more hours is not going to kill you, right? Like, you're going to be fine, right? So I expect kind of performance. If anything, it's actually going to be better for you afterwards. So I think that those standards are different and increased. But one thing I also want to check with you is that even from the conversations that we had beforehand, and also just because of a resonance I have with you, you also seem like a person that's also got a very deep level of compassion towards people. And what made me what triggered that thought for me is also the mention of gratitude. One, is that true? But also two, how do you balance that with the hardcore performance and cynicism towards people?
Oof, that's an interesting insight. And I say it's an interesting insight because if you had to speak to somebody that really knows me, they would probably say, no, Sean's not compassionate. He's not empathetic at all. And I would say that I'm very compassionate and empathetic with the people that I care about. And I'll be obsessively sort of empathetic or compassionate with like my family or like my closest of friends. And I mean, you're talking maybe like 15 to 20 people in total. Other than that, I mean, whether I feel it versus act it is maybe two different things. I think if you have to be a good leader within a business, you have to be compassionate. But whether you feel that's a different story. And I think this is something that I've been looking at quite extensively, and it's more got to do with some introspection. I think we do a lot of stuff in life because we're told to do it, right? Like as an example, we jump onto this podcast. It's how are you doing, right? That is just like, it's a, what do you want to call it? It's kind of like this act that we perform, and it's part of like the way society acts. But feeling things is a little bit different. And I question myself, how much am I doing because it's an act versus how much is actually your authentic self wanting to engage in something, or really like, if you say I'm not doing well, am I going to turn around and be like, why? I'm sorry to hear that. Am I feeling something? And prior to this podcast starting, you were talking about a couple of challenges that you're having, and I could resonate with that, right? So, we don't know each other exceptionally well or anything. So maybe there is that element of compassion or, intrigue that comes with that. But it does differ quite significantly. I think more recently, I'd definitely say I'm less compassionate than I was several years ago, though, without a doubt.
I'd debate that, right? Because I'd say compassion is an inherent quality towards understanding the human condition and knowing what people are going through. But this is where being nice and being kind are not the same thing. Like being nice to someone it's like, oh, shame, I'm sorry you're going through that. Versus being kind is it's like, good, I'm glad you're in a crisis. You're going to be more authentic on the other side of it. Like it's like, and that's maybe a bit of a brutal example, but you get the point. Is the fact that like sometimes being kind to someone isn't being nice to them, and sometimes the compassionate thing to do is also hold someone accountable, right? Instead of the sympathetic thing to do, which would be to be like, I'm so sorry. Yes, of course. Right. I totally understand. Let me help. Right. And I think we confuse those.
Yeah.
Compassion requires wisdom.
I couldn't agree more. That's something new for me to consider as well. Yeah.
So, okay. So now we've gone through that. Thank you for sharing. What I want to get into now is this is all, I guess, the origin story for what now became Altify. So now in this moment, crisis management, I guess, yeah, what happened next? Actually, we didn't get through how was that resolved? Did the business kind of tick back up again? Yeah. What happened next, and then how did that lead to the merger?
Yeah. So we made the decision to let customers know, and we let customers know, and we expected 90% of customers to churn, and we saw about 10% of customers churn, and then sort of this longer tail of further customers churning, but only in total maybe about 15% of customers that landed up leaving the platform. And that, I think, was down largely because of the way we communicated things, and also us getting on the phone with a lot of customers as well. And I went from going, oh my gosh, the entire business is going to be shut down, to, oh, we actually have a really big opportunity to build things back up and to actually fully resolve this. And, throughout this process, it was in the depths of this 2023 bear market within the crypto space. So crypto was not the talk of the town at all. I mean, you were certainly not going to be able to raise capital within that environment. We now had this sort of legal challenge that we needed to address, and that was always going to need to be addressed regardless. But then this opportunity presented itself, and it actually presented itself just before this whole incident started. I got introduced to a founder based in Austria, a guy by the name of Alex Voltanger. And Alex had started a company called Coinpanion, which is very similar to Revix, just focused on the Austrian market. They had raised about $7 million. And I mean, he had done this straight out of university. And I mean, not straight out of university as in he finished university. I mean, he was in university and he left university to go and build this. And him and 4 of his friends ultimately landed up building this business. They got to about 50 employees in total. And due to this entire market collapse within the crypto space, they were heavily impacted. And they'd had some co-founders that had left due to sort of mental health challenges. I think just extreme burnout after, just really going at building a startup for 4 years. And the team had been whittled down to, only about 6 people in total. So you can imagine, that many people being let go, and Alex being a sort of similar character to me, kind of going, my gosh, this is me. Like, I'm a failure. I have not been successful. And, I had a chat with Alex, got introduced to him through one of our existing shareholders at Revix at that point in time. And I spoke to him about what we wanted to do going forward. And it was going to be challenging because both of us had quite a lengthy number of investors on both sides. And, fortunately, I guess we were able to make things work. And it wasn't a simple process. I mean, gosh, I feel like I've got a mini little PhD in mergers, because we didn't just do it with Coinpanion. We didn't have Revix merge with Coinpanion to form Altify. We also included Bitfund in this conversation, which is another South African-based crypto platform. They effectively just decided that they were going to shut down, partly because they sort of just hadn't reached the critical scale that they needed to reach. And so now we were sort of engaging with them. That was a full acquisition together with Companion, which was a merger. And there's lots of personalities, lots of, there's investors as well that are going to be diluted. So there was just a lot to deal with at that point in time. And it's one of those approaches where you say, okay, this is a mammoth undertaking. We don't have a team of, say, 30 investment bankers that are going to be running with us. We're going to start and just have little bite-sized chunks. Let's put together a proposal of what this potential merger can look like. Let's agree in substance on what the percentage ownership split can look like. Let us talk to the different team members and see what they feel. And we went through the sequential process. And, within a few weeks, we were at a point in time where we said, yes, this can actually work. And I got to meet then the investors that I would be inheriting from the Companion side. I got to meet some of the investors as well from the Bitfund side. And, it all started just falling in place. And I guess I'd come from the investing world. So I'd seen a lot of these occur in sort of, much bigger businesses, so you're talking 10,000 employees plus. And it's not all that different when it's a smaller business, right? Because yeah, sure, you've got to still integrate teams. And I think with a bigger business, that's a much bigger challenge. But the actual dynamics behind the scenes is pretty much the same. You're having discussions around the ownership structures, the equity. You need to think about the legal ramifications, tax ramifications for investors. So there's a tremendous amount that you have to consider. And I think I was very, very lucky that I had a phenomenal team, an experienced team on our side as well that come from the traditional financial space as well. So we were able to sort of navigate this without too many costs. But my gosh, however expensive you think a merger like this is going to cost from a legal fee standpoint, it is always more expensive. And I'm talking significantly more expensive. And then I think the other thing is, if you think it's going to take, X amount of time, if you imagine a time frame, probably times it by 4, because it always takes significantly longer. I think that's probably the best advice that I can share with, if anyone's going to walk away with anything today, is if you're going to engage in any corporate action, whether that be a merger, an acquisition, you name it, it's going to take significantly longer and it's going to cost significantly more. If you go in with those expectations, I think you'll be in a better position.
So I definitely want to get into more detail there, but I think the sounds like the first trigger point of deciding to do this merger is it's again still the crisis thing, right? So it's like scanning the market is like, okay, people that are competitors either locally or internationally, it's guys, the world's screwed, right? The whole market is screwed. Like, what are we doing? How are you thinking about this, right? I'm curious, what was that first conversation like where the idea was, it's like, I think we should merge companies. I kind of made that didn't just happen. It was like, oh, I think you should merge. When did that idea come about that it was like, I think it's the right idea for us to merge companies? Like, what was that moment?
It was partly actually because we were in this market that was just really negative. And you have to think about coming up with creative ways to grow, to enter new markets. And I mean, we always wanted to enter the European market. We had worked for a very long period of time. Now I'm talking from the world of Revix, working with a bank in Germany. So we were going to operate underneath their license. And then that landed up falling apart for no other reason other than they were looking to be acquired by another bigger crypto exchange. So they had to stop engaging with us. We had looked at setting up in Malta. We had looked at setting up in Liechtenstein, sort of going across a whole variety of different regions. So Europe was always a big focus for us. So we saw this opportunity where we said, okay, well, we want to end up in the European market. It's just how? Do we have to merge with someone? Do we have to be acquired? Do we have to acquire another firm? What does that look like? And then just, I think by coincidence, right, one of our investors then connected the two dots here. And that was the start of then a much bigger story. And then it started to become like, okay, they're sitting with a fair amount of cash ultimately on their balance sheet. They've got, a much smaller sort of customer base. They've got a smaller sort of staff complement. We can look at getting quite a lot of efficiencies by bringing these businesses together. And that was one of the bigger motivations as well. So we were going to inherit about 25,000 European users. We would get a European licensed firm ultimately, which is, not a cheap endeavor if you were to go down the road of getting that yourself, and certainly not something you can get accomplished very quickly. We'd get some phenomenal talent because they did have some really good employees, and we want to bring those individuals on. And we were able to then effectively start afresh. And I don't mean this necessarily to walk away from anything on the Revix front, not at all. That was what actually my biggest concern is. I was very concerned that it would be seen as if we were sort of running away from any of the past problems. And that's not what happened at all. I mean, we kept the sort of Revix brand dealing with that hurry-related issue, but we said that we'll have Altify that is formed then that is more centered on alternative investments. And we had to enter this new world of real-world assets and private market investment opportunities. That's the big focus going forward. And, the investors or the shareholders at that point in time, they really bought into that. I felt really fired up about this. You can imagine it's also been sort of a roller coaster at this point in time for a good couple of months. And now all of a sudden you're seeing some light at the end of the tunnel and you're going, okay, this is something that, I feel really passionate about. And that was, that was, I guess, then what led to the next step, which was actually getting this done.
So talk to me about this evolution and new vision of the alternative asset class. Like, how did you have this conversation with the other founders in the room? I've got a whole bunch of questions still about like how that dynamic would have shifted, but just around just the new concept of a business, because it's like, it means all three of us need to scrap what our businesses have been for what this business will be now. I mean, that is how a merger works, but it's different to like the fundamental nature of the business is changing, right? It's like everything from what we're offering. Yes, we might be going after a similar marketing customer to what we were doing previously, but the offering to them is radically changing. Like it's a different business. How did you handle those conversations? How did you get to the point of alignment and realization that this is the path forward? Did that come from you? Did it come from debates and discussions? Was it like flying to Austria to have this chat? Like take me through the detail of like how this formulated.
Yeah, I guess to start with, I mean, if you bring both businesses together, the question was, okay, do we remain Revix, or is there the brand Coinpanion that continues? Is it perhaps Bitfund? What do we do on that front? And I think something that I'd been thinking about for a really long period of time is just how you would see the private market space get democratized over time, and something that, and this is an area, of course, that I'm very passionate about. And I was saying, if everything had to just stop tomorrow, and this was part of my reflection process over many months, and this was based on, I don't even know how many conversations, right? And yes, flying to Vienna as an example, having a chat with some of their shareholders, guys that were incredibly successful, so, sold 100 million euro businesses. And having these discussions, getting feedback, in some cases disagreeing with the feedback, some cases agreeing with it, kind of working your way towards what then ultimately would be this story with Altify. I mean, that was the entire journey ultimately. But I just knew that if I was going to stop everything and I was going to start something new, I kept asking myself, what would that new thing be? Because it's the thing that you're going to be the most passionate about, and it's the thing that you're going to believe is going to work the best in the market. And it was really that sort of, I'll call it like a first principles approach, but it was that fundamental view of, okay, how do we make sure that whatever the direction is that we're going for is going to have the greatest product market fit possible? Because when you're playing in a market where you've got a strong pull, like there's, that's half the battle won. So that was the one factor. And then the second factor, of course, needed to be that you had a team that were able to build in the space. And I thought that there was a really nice transition to go from digital assets to private market assets. And I think something that I haven't mentioned earlier in this is that we're not just focused on your traditional private market investments. So you're not talking about like a private credit fund that is offered to an investor. All of the products we have are tokenized. So they're digital assets. And I guess that's a key ingredient, because you have to have that sort of blockchain, crypto native sort of infrastructure in place in order to offer any of these products. So we had the perfect tech stack at the end of the day to be able to move into this direction. We also had team members that understood this digital space, and I knew we could bulk up the team with more traditional alternative investment managers. So, in short, it definitely wasn't a straight line. I think we went even, as far as to go into the B2B space to start with. We started going down that B2B route. I even put together a B2B pitch deck, right? This is where the merged businesses would offer our technology in a B2B format to wealth managers and financial advisors. And that's just
like
seemed the
white
easiest.
labeled.
Like effectively a white labeled or API-based solution. And pitched, I think, to several investors about this. I think my first pitch actually to the Coinpanion investors, like the vision that I had for the business at the end of the day was this. And a lot of them liked it because, B2B is just seen as easier than B2C in many respects. And I think to some degree that's probably true. But at the end of the day, that wasn't really where my passion was. And, after a lot of, thinking about it and going, okay, where's the market that we can win in, and what's the space that we can win in? I said, no, the B2B side is probably not what's going to work best. Went out, rebuilt a pitch deck, rebuilt sort of a business strategy that was more B2C focused. And that was Altify, ultimately.
Epic, dude. The benefit of having a good story makes you a good storyteller as well. But you are a good storyteller too. Appreciate the share. Talk to me about the power dynamics of handling this between a bunch of CEOs and founders of other businesses, and how the decision came about that you would be CEO. I can't imagine that was a straight line either.
To be honest, I was so lucky. So Bitfund had made the decision that they weren't going to continue. And it was kind of, what would they do? would they sell the business to somebody else? Would they just shut down and do nothing? And so that engagement with that team was a lot easier. So at the end of the day, that was, we'll be taking over your customer base and we'll take over some of your IP. And that was the end of that. That engagement
Because
went
that was
really
more
well.
of that's more of an acquisition than a merger.
More of an acquisition than a merger, but all part of that same sort of merger transaction. And that's why,
Sure.
it was all sort of bundled together. I mean, if something is hard, why not make it a little bit harder, right? In hindsight. And then with Alex Voltanger, the CEO and founder of CoinPanion, I mean, he had also fortunately made the decision that he wasn't the right individual to be leading this business. And I think it was the right decision, not because, I mean, this guy's remarkable from a founder perspective. Like, he is the kind of guy that goes, there is a problem, I'm going to solve it. And he will do whatever it takes to solve that particular problem. But when you start going from earlier stage business in the tech space, because that's really where, both Revix and CoinPanion were, but now you're going into the regulated financial services space, you need somebody that is very passionate about investing, very passionate about building financial technology and compliance and all the rest. And he definitely wasn't the right fit for that. And he had that honest conversation with me where he said, listen, I'll come in and perhaps fulfill a strategy role for a period of time. And he did. He came in and he supported in that strategy position for a while. And then he went off and actually started another business called Heimzer, based in Vienna. And we're still on very, very good terms. He's on our board. So, I mean, things ended there in the best way possible. But I can imagine that it would have been significantly more difficult if we were going to have a fight over who's going to be the CEO and who's going to be making ultimate decisions. And I've got to hand it to him. He was remarkable in this process. I mean, for him, it was also giving up my business, giving up the entire brand. And I'm now having another CEO that's going to be calling the shots. And he respected every decision I made. So I couldn't have asked for a better transition in that respect.
Yeah, that's amazing, man. I think the level of humility on his side to admit that I'm not the best person to do this is that I think without that humility, there's still the other side of being a founder and being the problem solver of, and it's not even the ego that comes in. It's actually about the fact that it's this, my job, I should be doing this, I could be doing this, I could be having this problem. That's a hand over the authority for someone else to make a decision, but also to give them the veto rights over to not go ahead with your decision or your thinking is really hard. It takes a lot of self-awareness, I think, to do so. So you definitely struck gold, pun intended, on making sure that you found the person that you're going to merge with that level of humility.
Without a doubt. No, I was incredibly lucky. And, I think the other weird thing is, right, when you go into a management role, and I'm sure this will resonate with a lot of people, but when you go into a management role, you also realize how amazing it is when you've got somebody that just, does work in a remarkable way. So they take initiative, they ask questions when needed. And I mean, I'm now being very idealistic. They report back when required, but they're just that trustworthy individual that you're working with that you go, this person's low effort and they're remarkable. And Alex, I think, had seen enough of that. So like what a remarkable individual looked like because of the team members that he was working with. And then of course, what sort of the opposite looks like, to be able to get into that sort of position and be like, Sean, I'm here to support you. What do you need? And just ask some really good questions. So yeah, I agree. I think the self-awareness and humility and all the rest was, it was off the charts, was incredible.
You mentioned now that it took 4 times longer, more efforts and more costs to do the merger than you expected. What about it was a lot harder and more effortful than you thought it would be?
If anyone's
Besides
done,
everything.
I was going to say, well, every single little logo that we had anywhere, right? Whether that be on our mobile app, our web app, our website, the entire website has to be rebuilt. The entire help center has to be rebuilt. But like, there's just so much that needs to change. Every line that you have on your various tech platforms, that changes. If you're changing your colors scheme or you're changing your CI more broadly, all of that had to change. And that was the easier part. You've then got to deal with different tax systems. You got to deal with different laws. And for anyone that's dealt in the EU, the EU, like more broadly, they love a notary. They love a notary before you can do absolutely anything. So you're having to deal with notaries that are effectively Austrian, so they speak German, and you're having to then go through translators, and you're having to do all of that with very expensive legal partners. So that was, all in all, just an incredibly tedious and, frustrating process. You're also then trying to look for like the optimal structure, right? Because if you just went ahead and acquired a business, there's going to be a taxable event for all of those shareholders. So you want to try to avoid that, right? Because they're actually not exiting and they're not walking away with cash. They're becoming your shareholders. So how do you avoid that? How do you actually structure so that isn't the case. And then you are engaging with lawyers, and you're getting various opinions on this, and it's just a never-ending process. And what happened with us, which was quite interesting, is that we actually had CoinPanion's company become Revix's sort of parent company in a sense. So there was no realized taxable event. You had CoinPanion's holding company based in Austria that became a big shareholder in Revix's UK company ultimately. And that was how we went through this entire transaction. So there was no taxable event for either one of the shareholders. Otherwise, that would have happened. So that was an expensive exercise. I mean, if I had to tell you the amount that we paid lawyers throughout this entire process, significantly more. That was probably 4 times more than we were expecting.
And just on the registration of the business now, seeing as like Revix became now the majority of the shareholding owned by CoinPanion, where does Altify come into this as its own registered business, or is it now like CoinPanion trading as, or like how did that work? How did that get separated?
Yeah, so we had some subsidiaries, like the South African subsidiaries that we had. They were Revix entities ultimately. They were left to be separately managed. And then you have Altify now, which was Revix's old holding company, which was just ultimately renamed. So the merger from the simplicity standpoint was just where you had CoinPanion's entity become the sort of investee within Revix's holding company. And then Revix's holding company then had its various subsidiaries that then were renamed to Altify. There was a couple South African, this is what I was saying earlier, there's a couple South African subsidiaries that used to serve the South African customers. They remained as Revix or as Revix as separate. So it was actually a renaming of a lot of businesses throughout this merger rather than having to just incorporate new entities that ultimately then landed up in Altify being formed.
Sean, I'm gonna need you to just explain that to me one more time, a little bit simpler. I don't have a background in investment management. I just want to know, how is it that you break that down? Where does your shareholding sit personally as the CEO of this company? Like, where are you the shareholder now? And yeah, because I have this fuzzy picture in my head of like a bunch of South African companies into Revix, but that's now owned by CoinPanion, and I'm still actually not actually sure where Altify fits in that.
Yeah, perfect.
And
So
then where
I'll
you fit
simplify
into
that.
that.
Yeah, as finance guys, we do love a little bit of jargon, and we also love to just speak about things. I think one of my weird tendencies is to be like, yeah, this is what happened and this is like the outcome, and you just get it, right? So in simple terms, you had CoinPanion and you had Revix's holding company. In order not to trigger a taxable event, you had CoinPanion become an investor in Revix's UK company. So you can see how those two are sort of tied in now. So
Okay, but the
you've
holding
got,
company for Revix was based and registered outside the UK. You had some registered companies in South Africa that were subsidiaries of Revix as a holding company. And so
spot on.
what happened now is that CoinPanion took over a majority shareholding of the Revix holding company.
They actually took a minority shareholding in that Revix holding
Okay, cool.
company. We renamed that Revix holding company to Altify. So that kept the same shareholders, right? So the shareholders then wouldn't have had a taxable event. You've then just got CoinPanion as being one of the new shareholders that have come on board. And then in terms of some of the subsidiaries within that Revix group previously, they were renamed to Altify. There were some subsidiaries, though, that weren't kept within the Altify group. They were held separately, and those are the Revix entities that were serving some of the South African customers.
Okay, so where Altify actually sits as a company that is registered but a subsidiary of the Revix holding company that is wholly owned by Revix, right? And then CoinPanion is a shareholder in the Revix holding company, and then obviously shareholders of CoinPanion will then feed through, and then it's still the board structuring that needs to happen after that based on the shareholding accordingly and who you want on that board.
Exactly. I mean, in simple terms, Altify's structure is actually not all that complicated. You've got a UK holding company, and you've got CoinPanion as one of the investors in that UK holding company. So that was the only real big change in this transaction, is that CoinPanion became a shareholder. That UK entity, that Revix UK holding company, just was renamed to Altify. And then in terms of the subsidiaries, a lot of the subsidiaries were renamed to Altify. And you had some subsidiaries that weren't brought into that Altify group, or they were then effectively left as Revix subsidiaries.
All right, so now that obviously now the merger's happened, right? But then there's also this massive rebranding exercise. There's this whole communication that you need to take to market, kind of like relaunch of the business. How did that all go, right? And then what was the process of, this is still really difficult and I've got lots of stress about getting this right. And then the point of, it's like, Okay, cool. That's done. Now we can lift our heads up and move forward. Like I want to know that journey.
Yeah. So we announced to the market that Altify would be formed. And I mean, the reception initially was really positive. We had a lot of people asking questions, what's going to change? It was a lot of change for our existing customers because you need to let effectively 75,000 users know that they're no longer engaging with Coinpanion or they're no longer engaging with Revix, and that certain investment products that they previously were invested in either would be or wouldn't be supported. And that was a big process. So there was the announcement, this is going to be happening. And then there was actually the sort of execution where you then needed to combine all the customers onto a single platform. You needed to, launch the new websites. You needed to go through this entire process. And we had literally the worst launch that you can possibly imagine. So on the day that we were launching, this is a true story. This is on the day that we were announcing to the world that we were Altify and we were letting all of our customers know. We were obviously deploying our new technology backend. So that's effectively the new app and the new web app that you could log into as a customer. And over a half an hour period, we make the assumption that a customer tried to log in and they were taken to Altify. Now, the customer had no idea who Altify was. It was literally in half an hour's time, we were going to be sending an email to them. And during this period of time, they went and reported us to some sort of global spam and sort of like
there's been a cybersecurity
site.
problem and a hacking issue, and the fact that it's like where I'm going there to go access my money and assets is it's like there's another company now. Oh my god, what's going on? Red alert.
Yeah, and everything was frozen. Like for us, all of our social media accounts effectively inaccessible. People wouldn't receive a single email from us. So how's this? We send out our first email, no one receives
And
it.
it bounced.
Everyone, not even like there's no one, not one person was like, I've got this. And now we're in crisis mode because the domain that we were going to be using was altifyinvest.com. And we had to find a solution to this. So, I mean, we literally went out, registered the domain altify.app, and we had to start again setting everything up on altify.app, which was this crazy 3 or 4 day process. And we had to sort of let our customers know, it's something that we can smile about now. I mean, I have no idea
that's
how.
the worst, dude.
Yeah.
Well, I think lesson in the past is like communicate with people before we change things.
Yes. No, without a doubt. I mean, this was one of those things where it's like, you don't want to communicate something and then somebody goes, what on earth are you talking about? Or like, this is going to be a change. I'm going to get nervous and scared. It was rather check out our new website. This is what we put together. You can log into this now. You'll see all your holdings are still there. And it was meant to be that sort of like, this is going to be not a big change. Don't worry about it. And just unfortunately didn't go down like that. So everything needed to be set up. And that was just this incredible, insane sprint. And that was one of those things where it's like, we have a good old fashioned business problem and we're going to deal with that. And we had to, we dealt with it over a couple of days. Customers ultimately got unified on a single platform. That took a bit of time. Of course, customers need to feel familiar. We had to also sort of translate the entire platform to be German friendly. And I'm sure you know a bit about the German language, but the simple words that we have in English all of a sudden become like that long in German. So you got these long buttons and you've got to then adapt the system to that. So it took a really long time. And that's why I say whenever you go through these things, I mean, there's all the obvious, like we need to get the paperwork done. We need to do all these other various things to complete the merger. But there's this long tail of unexpected things that land up coming up. Also, sort of dealing with Germans in customer support, Germans wanting to speak with you, German media wanting to engage with you. And I mean, my German's almost non-existent. So that was an incredible process. I smile about it now, but at the time it was also super stressful. But I think everything that had happened with Haru had sort of made all of this kind of like, yes, this is a normal business problem. I can deal with this.
Yeah.
This is cool.
Oh, it's also within my control to fix, right? It's like also the extreme ownership. It was like, yeah, this was our mistake. We cocked this one up, but we can fix it. Versus this is like the world's ending. I guess the launch V2 now, right? Within a week. How'd that go? And we off to the races? Were there still some other like legacy problems or things to unpack, or was it like, okay, cool, the worst is behind us?
No, it was a long, several month period of having to fix little things. So as an example, if you set up 2FA on your account, I mean, how do you update the sort of 2FA registration or two-factor authentication registration to not include, let's say, like an old logo of either business? How do you make sure that all of Coinpanion's 2FA registered users and all of Revix's 2FA registered users have a unified 2FA account? Well, you need to kind of kick them out of their account and then they've got to log back in. So it's all these smaller things which just just took a really long time
It's a
to finalize.
painful amount of admin.
Totally. And of course, you've got a whole bunch of investors that have traveled, and I'm saying now investors as clients that have traveled over that period or just haven't been paying attention to their emails. And now they come along and, oh my gosh, all of a sudden I haven't seen anything communication wise about this, but I can't log into my app. What's going on here? And then you're having to explain to them what exactly has happened. And yeah, it was an interesting period. You also have to migrate all of the transactions from one platform to the other platform. And I mean, that you think is an easy undertaking, but you've got completely different structures to your transactions. You've got entirely different databases. So no, it was a monstrous undertaking, and it took many, many months. I would say we lost probably about 10 months of being able to develop anything for the external world over that period. Everything was just internally focused.
And now, I mean, we're a year and a half down the line since well, at least according to LinkedIn, since you became the founder and CEO of Altify. Are you still dealing with these problems, or is this now behind you?
No, this is now behind us. Thank heavens.
How long ago? How long have you been in Altify as you desired it to be? At least in the launch phase. I think your vision for a different thing, but yeah.
Probably from December last year. So I'd say 6 months and maybe roughly around 6 months. That was the first time where we weren't just addressing legacy issues of, okay, these user accounts need to be dealt with in a particular way. So it took a very long time just to deal with the system integration. And I think this is maybe some really good advice that I can share with whoever's watching or listening. And that is, when you're looking at tech systems, right? Because Companion had the same backend system or the same code base as what we had. They had a .NET core backend, they had a React front end, and a React native mobile app. Perfect tech stack alignment. The challenge comes in when you've got disparate systems. It's not like you can just go and connect the systems. It's not like you copy and paste one Excel file and move it over to another or anything like that. And we ultimately had to scrap that entire Companion system. I mean, you're talking a business that has raised close to 200 million rand, right? A bit more actually than 200 million rand. And that entire system that they've built and that entire brand that they've spent money on building in the Austrian market is now effectively being scrapped. And that's also a hard decision to make because you don't know what you're letting go. Their development team also became part then, of course, of Altify. That team then had to get to grips with our new system. And they're absolutely brilliant. I mean, I'm talking about some of the best developers that we've ever worked with in our lives, but it took them a good 6 months to feel comfortable on our platform. And I mean, now they're rocking and rolling, but it was a lengthy process.
Yeah, man. I definitely have to give you kudos for what you've been through, right? I think that the entire journey and the motivation, the passion to keep powering through, especially in crisis mode. And I think the point is, like, having gone through that is, it's like nothing's as emotionally hard as this, but this is boring, hard, tedious, frustrating. Like there's different stacks of emotions you need to deal with in this kind of journey and process, where the large majority of people would have given up, right, at crisis time, right? The fact that you powered through that, a lot of people would have given up with the migration and integration stuff just because it's so painful. It's like, this is way more than we thought it would be. So kudos for making through it.
Thank you. I appreciate that. I mean, look, letting people go over the years, of course, right? Having to scale down teams. I mean, we haven't even got into some of the detail around like how Standard Bank gave us a term sheet many moons ago, and then FTX happened, and this was literally within like a week. Well, the term sheet was given to us many months before this, but the investment committee was meeting a week after FTX happened ultimately. And it would have been that investment committee that would have signed off this pretty sizable investment into Revix back in the day. And when FTX happened, they effectively said, there's just no way we can move forward with this. And the bank stopped all of their crypto initiatives. And that was the first set of really heart-wrenching layoffs. And that was, terrible. It was one of the worst experiences. And that for me back then was this massive undertaking. And certainly the most difficult thing. And then you fast forward and all these other challenges land up coming up. And I think it's interesting when you look back at all these different things. I mean, of course, it's totally different when you in those exact sort of scenarios or those circumstances. Your mind's in a different place. You having to respond to different sort of challenges and stuff. But the experience that you'll end up getting to all of this, which is this weird story that I keep telling myself now, it's like, you go out and you're pitching to investors, or you go out and you are looking to pitch to customers because you're wanting to get new, people to join the platform or whatever that may be. You're pitching to new talent or, new rock stars to join the business. All of these things that you've been through, they end up just allowing you to interact with these people in slightly different ways, right? If an investor turns you down, it's not this devastating blow. It's kind of part of the game. And it's exactly like that with so many other things. And I feel like that's sort of where I'm at now. And I'm very excited about, the next 6 to 12 months, and obviously well beyond that, because you will have so many other really difficult periods. But I truly know that I grow at an exponential rate, and the business grows at an incredible rate, and everyone within that company grows at an incredible rate when you go through those challenging periods.
One of my favorite quotes is, "A comfort zone is a beautiful place, but nothing ever grows there."
Yeah.
So Sean, what's your biggest challenge now that I think you've got the worst of the worst, and then the challenges and the hurdles and the admin and the problems and sleepless nights behind you? Yeah, what are your biggest challenges now in taking this business to the next level?
I think probably the biggest challenge right now is being able to get to that next level with customers and with investors and all the rest. So that ultimately requires capital. So you got to raise another funding round, and you've got to then be able to hire remarkable people to do a lot of marketing and brand awareness in order for the company to really just be able to onboard that next 100,000 customers. And that's the challenge. It's all of that in one. It's not just attracting users to the platform. It's retaining phenomenal talent, attracting great talent to join our sort of journey as a business, to inspire people to want to invest in private markets and to educate them, which is also part of that. And raising capital, I guess, in this environment as well is pretty challenging. I mean, we're in a hot space. If you look at private markets and in the financial circles, private markets are a big talking point, and the tokenization of private market opportunities is big. So it's there's a lot of investor interest. So I'm very confident that there will be further capital that's raised, and we'll be able to enter new markets, because we're fixated on now entering the Middle Eastern market as sort of another big stepping stone for us. But I mean, I think there's challenges across the spectrum now. There's no one challenge, I think, right now that's sort of keeping me awake. I think, when I engage with external investors, and I'm now talking about, potential, funding partners and all the rest, they often go, well, isn't regulation going to be the biggest thing that you have to deal with? Because I mean, you're in a highly regulated space. And for me, it's like, well, that's just a process. It's a function of time and money. The bigger challenges are kind of, how do you make sure that you're hiring these people that you can trust on the team and that you want to work with for the next 3 to 5 years? How do you make sure as well that you're enjoying the journey? And I think that's another big part is, you got to wake up on a daily basis now, 7 years into building whatever it is, right? And you've got to still feel motivated and excited and passionate. And it goes through waves. I think that's the other thing that I've certainly realized, is that you go through these waves of feeling like incredible founder company fit. And, you feel like, oh my gosh, this is my life's calling. It's absolutely incredible. And then you go through periods going like, why am I here? I'm like an absolute, no show. I shouldn't be in this position. And I feel right now like I'm in exactly the right position where I need to be, in terms of like, I'm the right guy to be able to raise capital. I'm the right guy to be able to lead the team. And it's just hitting that next level of scale. For us, I mean, we put a lot of systems in place as well that I know will allow us to hit our next 100,000 customers. It's just how and when and what do we need to exactly do along that journey.
Well, how are you going about solving that now? Because like my next question was going to be always like, well, what does the future hold for you? I mean, you're totally clear on that. So I guess the next question is like, yeah, how are you going to get there?
Secure a decent new capital partner. So that's, where we'd look to raise our next funding round. That would then, give us the firepower to be able to aggressively enter the UAE market as the next stepping stone, and to bring on board some remarkable individuals across the development, marketing, and sales sort of areas in the business. So that's the main focus now going forward.
So it's really just that growth constraint of unlocking that capital, and then bam, off to the races.
Yeah. And I think often you'll hear founders or, CEOs of businesses go, we just want to raise capital so that we can build out this next feature on our platform. There's the feature side of things. That's not the concern. I mean, we as a business, we're profitable now. It's a different sort of thing, but I want capital to be able to grow into new markets. And it's not to grow for the sake of growing. I don't particularly want the team to grow too aggressively. I think it's more a case of being able to sort of enter that next level where you actually can democratize access to private market investments. I mean, as much as I'd love to do that, where we stand right now, linear growth is just not going to get us to where we want to be. It'll take my entire lifetime, or our entire lifetime, I suppose, to get to a point where you're hitting like a 5% of the population, whereas capital can get you there a lot quicker.
That's exactly why VC exists. I mean, I've got a whole nother debate around the fact that people approach VC for the wrong reasons, and VCs treated for as life support and survival. But like that's the reason why capital needs to exist at the first place, is because to stimulate growth. And the fact that you got profitable first and taking it to the next level is awesome. Sean, for many reasons, right? I'm grateful that you've shared the story. I'm grateful that you've been so authentic. I think the path that you've laid, the crises that you've been through, the mistakes that you've made in your journey, the fact that you're sharing this so openly, and which is still solving, and I imagine still like you've had the prequel, but this only feels like the beginning, right? There's a chapter 0.5 that happened now to chapter 1. But you've got one hell of a story, man, and you've had one hell of a journey, and I'm excited to see the rest of it. So thank you for sharing it so far on the podcast.
No, I really appreciate it. And I think you'll hear this from every company, right? Whether they're a big listed firm or, they're a tiny startup, you'll hear the recurring statement of, I'm just getting started, or we're just getting started. And it really feels like that. It feels like there's just so much more to come. So Cameron, thanks very much.
As has been clear, Sean has been through an absolute gauntlet of challenges getting Altify to where it is now. And one of the challenges that remain throughout all of this is obviously having clarity, right? Whenever there's a crisis that hits, whenever there's a merger, whenever there's a new challenge, whether we're raising investments, being able to clearly explain what it is that our story is and our narrative is and what the plan is towards our shareholders, our potential new investors, our employees, our co-founders, the person whose company we're merging with. It's all absolutely crucial on this journey, and that's really what we specialize in doing. Like everything that you've got in your head and the thinking that you have, we're taking that out, we're going to clarify it, structure it, and make it as easy as possible for you to communicate so other people can take it, understand it, and be able to run with it, right? At the end of the day, if we're able to do that, scaling becomes a lot more straightforward because you can actually focus your attention on growth whilst the people around you focus on what they need to do to get you there. So if you want to see how we do it and how we've done it for some other people, have a click in the link with the description below and you can see some of our case studies, or you can book a call with me. We can just have a chat about how we can help you do the same. So thanks again for sticking around for another full episode of the Founder Files. Grateful that you are here, that you continue to be here, and I'll see you at the next episode. Cheers for now.